Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. It is December 7, 2024. Time is 11:45 a.m. And in this video today, I'm going to try to answer and reply to your questions and comments to the best of my ability. And I really have to emphasize that, to the best of my ability. Now, let's go back 1 month ago to a comment written by Ben Hutchinson. I suppose I don't have to talk about this one, but he did mention something quite interesting here in regards to a company called Unico Silver, ticker code USL. Now, I did not know about this, so I did actually have a read of this comment, and then I had a check. I went, oh, that's really interesting. So what this company did is they went into trading halt, and the reasons, and typically when a company goes in trading halt, they talk about why they're in a trading halt. And in this instance, Unico Silver says we're in a trading halt because of a material acquisition and a capital raising. And then they later retracted that, saying we're only doing the only reason the trading halt's in place is because of the capital raising. There is no material acquisition. And Ben Hutchinson just mentioned that he makes him wonder, did the acquisition fall through? I suspect this is why the share price is down so much today. Okay, so let's just have a quick look at this, very quick look at this company. Unico Silver, I don't know much about this company at all. In fact, that's a lie. I don't know anything about Unico Silver. They just released an investor presentation. And when I say just released, I'm talking about 3 weeks ago. In fact, I have a quick look at that. And we do have to go back 3 months. So there it is. Trading halt on the 4th of November. Successful placement 2 days later. And alongside that particular announcement of the successful placement, they had to release also the trading halt clarification. And in that trading halt clarification, they just mentioned, what did they just mention here? We should clarify the trading halt should not have stated at point 2 during the halt until announcement regarding the proposed capital raising and a material acquisition is released to the market. The reference should have been to only the proposed capital raising which the company has just undertaken. So no matter what happened or why it happened, this was, I suppose, an unprofessional look from the company, particularly if it was just a simple mistake. Someone put in there for no reason. Now, if the acquisition fell through, I could probably forgive them for that. But if there was never a material acquisition and just went through their systems, there is something amiss. So maybe this will never happen again. Now, let's have a look at this company. Of course, they're silver. It's in their name, Unico Silver. Where do they have their projects? Looks like in Argentina. Fully funded 50,000 meter drill program underway, unlocking new discoveries and growth. So obviously this is an exploring company. Now, I am trying to stay away from exploring companies, and there's a few reasons behind that. Not for me, particularly compared to maybe some other investors out there who love mining exploring companies, because if they do hit pay dirt, the share price appreciation can be phenomenal. But a lot of these mining exploring companies never hit pay dirt. Corporate snapshot, this was a little time ago at a share price of 22 cents. Current share price is 20.5 cents. So not much change since then. So market cap 95 million. They have $34 million of cash. So I'm assuming they don't have any debt, which means they have an enterprise value of 61 million. Major shareholders, Austral Gold, Eric Sprott. Eric Sprott. Well, there you go. I'm pretty sure this is a Sprott I know. It's a Canadian investor, a Canadian billionaire businessman. That's interesting. Unico, how did he become a... There we go. $8.5 million placement, cornerstone by Eric Sprott. 17th of March 2022. He has options at 26 cents, but they expired 31st of March. So placement price of 17.5 cents. So he's in the money right now. He's in the profit. That's really interesting, Eric Sprott. So he must have, it's not a large amount of money because he's a billionaire, I think. So it's not a large amount of money, but just show you that someone big in this area. Eric Sprott is, I think he's quite famous for telling his investors to get into gold and silver. He's very much a gold bug. He's probably a silver bug as well. And I'm pretty sure he's the one who said, get out of the stock market in 2007, 2008 and get into gold and silver. I'm pretty sure he's famous for that, or that's one of the things he's famous for. I could be wrong. Anyway, if you go through this, you talked about Argentina, this project. It looks like they acquired some things over the last few years. Anyway, one of the things I'd like to know about these type of companies, exploring companies, are they near production? Are they close to getting into production, or it's a long way away? Anyway, not for me, but let's have a look at the chart. Maybe the chart will tell me something completely different. Unico silver. I don't have a silver watch list. Maybe I should. Maybe I should create one. Now, so when did Sprott take a position? That was March 2022, if I remember correctly. I could be completely wrong. And yeah, the share price wasn't in downtrend at that point and continued downtrend. So it didn't cause a lot of excitement in the market. Maybe just a blip. When was it? 17th of March? Yeah, so it looks like there was a bit of a rise. On the 18th of March, share price rose 24.4%. And you can see the share price was in a downtrend. Even though there was a little bit of excitement on that day, some nice volume came through, it wasn't enough. And the share price went back into its downtrend, continued to fall, showed the first signs of its moving out of the downtrend back in February, March of this year, because the share price couldn't get to a new lower low. And then when the share price went above the previous high, that was back in March, that was a breakout. And that was a change in trend in the share price. So perfect shift in sentiment and change in trend share price in this particular chart. So if you were following this company, you could have got in late March, early April at about 14 cents. So share price has increased a little bit since then, about 50%. Chart was looking really good, and the share price has pulled back. And I'd say probably one of the reasons why the share price has pulled back like this is because of a decrease in silver prices. For instance, if you have a look at many other silver companies, share price has pulled back a fair bit, and that's, I think, just because of silver. Just to confirm that, let's have a look at silver. Silver. This is silver prices, and you can probably see a bit of a correlation there. Silver prices have pulled back, but not quite to the extent we've seen some of these silver companies pull back. And in fact, silver prices have gone a little bit of a rally the last few weeks. Anyway, so maybe now's the time to get interested again in silver companies. So thank you for that, Ben Hutchison. He also wrote another comment in regards to integrated research. Now, I had been trading integrated research. I am out. I just want to confirm that I am out of my trade. I took profits. So I got in back in March, April, when the share price was about 35 cents. Company released a really good announcement on the 9th of May. Share price rose 53.75% on that day. Share price kept on rising, almost got to $1, and then a little bit of weakness back in August. I took some profits then, and then I've just taken profits within the last week or so because the share price has fallen through a support level, and the share price is moving into a downtrend. And one of the things that Ben mentioned here is the CEO. And they did announce a new CEO, I forget when, feels like that was about 4 to 6 months ago. And it was an uninspiring hire. I saw the announcement, I went, oh, this doesn't sound, here we go. Is that it there? John Ruffin, 9th of August. Yeah. No, wait there. John Ruffin resigns as Managing Director. IR CEO appointment, 7th of August. There we go. And just the history of this particular CEO, Ian Lowe, that's right, didn't really fill me with anything glowing. So he has served as CEO and Executive Director of ASX listed and privately held companies spanning finance, media, sustainability, and measurement, including AdSlot. It's like, EP&T Global. It's like, Opus Consulting, Affiliate Digital. Nothing really exciting there. Now, just because this is not that much of an inspiring hire doesn't mean he can't do really good things. So it's up to Ian Lowe to prove everyone wrong, that he was the right hire for this role and he can lead integrated research forward. But I think right now the market is a little bit wary, and that's why the share price has pulled back and has now moved into a downtrend. Anyway, so Ben Hutchison also mentioned, he talked about the CEO, he also mentioned he took profits because of technology obsolescence, can't even pronounce that, obsolescence concerns. Monitoring features are bundled with every cloud provider nowadays, So what's Integrated Research's value prop? With Integrated Research, I don't really care about that sort of thing. I just care about the trade because the share price had fallen a lot. This company could turn it around, may not, and I was just relying on the chart. Otherwise, whether the Ian Lowe can turn the business around, I have no idea. And again, I'm just relying on the chart. And the chart is telling me the market is concerned about this company moving forward. Now, it could change, and maybe this is the low in the share price, and the share price could take off again, and I'll be willing to trade it again if that does happen. Anyway, so I don't consider Integrated Research to be a high-quality company. So because it's not a high-quality company, I'm just willing to trade it, and that's it. George, VV50K, with hindsight, I think the EZZ drop is the market pricing in and reacting to a Trump victory in America. His tariffs will weaken China, which is bad for EZZ. Well, technically, his tariffs will weaken America as well. So weaken China, weaken America. In fact, they'll weaken America by even worse than China, because the Americans themselves will be paying for the tariffs. It won't be China paying for the tariffs. It'll be America. China might sell less of their stuff to America, but it's the Americans who will be paying. Anyway, so EZZ, this one's a weird one. Share price has continued to fall. I did take profits, and I did put this downtrend line. It's just going to zoom out like that. And it looks like maybe in the last few trading days, it broke through this downtrend. So maybe the bottom has been reached for EZZ. So I'm saying maybe at this point, the very fact that I was waiting for this particular downtrend to be broken, it's finally been broken. And so maybe the downtrend has been reached. The other thing I'm looking forward to is their January, December quarter results, because they've just come out of the weakest period, their slowest period, and typically the next few quarters are pretty good for EZZ. And I'm thinking the market might have slightly overreacted to those worst results. So I wouldn't be surprised to see this the bottom for EZZ. And I have been thinking of not getting back in, but adding to my position at a much lower price than I sold. So I'd be happy with that. I'm trying to remember when I sold. I forget when I sold. I sold at 450. Yeah, not quite the high, but near the high. And I'm willing to buy back in because the share price has almost halved since then. Not quite, but it's almost halved. So I'll be willing to buy back into EZZ Life Sciences. But maybe you're right. Maybe that's one of the reasons why the share price has pulled back. World Travel, G6M ASX long time trading halt. G6M, I have never heard of this ticker code. G6M, Group 6 Metals. Okay, let's have a look at the trade history. So last traded 26th of September. So I'm going to be honest with you, this is not a long time for a trading halt to be in place. There are trading halts that have been in place for well over a year. I know one that's been in place for a long time. Now, if they're in place for more than 2 years, the company will be delisted, by the way. Nexium Group, last time they traded was the 22nd of April. I'm still waiting for this. They mentioned about an acquisition. That's why they went into trading halt. But that's 7 months ago, almost 8 months ago, and there's still nothing. The last announcement just was Appendix 4C, long-term suspended entities. So this is a very important announcement released by the ASX. So long-term suspended entities, talking about how long these have been suspended for. The entities, this is the fourth bullet point, the entity's 2-year deadline to execute its plans for trading in the securities to resume to ASX satisfaction. They've got a 2-year period where they can be suspended. After that, they will be delisted. So you can go through this, for instance, this G6M won't be here. Of course, it hasn't been that long, but NNG must be in here. And yeah, 26th of April 2026. That is the 2-year deadline. So this is actually a fairly important announcement released by the ASX if you do own shares in a company that had been suspended for a long time. For instance, let's have a look at a company that is suspended for nearly 2 years. We can find one. Here's one, Candy Club Holdings. Well, they went into administration and they did mention about a backdoor listing, and it's nothing there. So they've probably done that backdoor listing. Connected, well, that's old. Here's one, Copper Strike Limited, 12th of December 2024. Let's see what's happening with Copper Strike Limited. Are they back to trading? Looks like No. So they don't have much time to get back to trading. Cash flow report. What's this meeting? Some sort of meeting from Copper Strike. Not sure what this was in regards. Remuneration report, re-election, facility. Okay, so anyway, this is a very important document, or whatever you want to call it, release from the ASX in regards to that sort of thing. Other than that, G6M, why are they in suspension? They should mention why. So if we go back, suspension from quotation, it should mention in this particular announcement why. Let's have a look. Group 6 Metals is currently engaged in confidential, commercially sensitive and incomplete negotiations with multiple parties, including company's senior secured lending group, in respect of a potential transaction in connection with the recapitalization referred to in an ASX announcement titled Additional Capital Secure. Okay, so a little bit too complicated for me, and this is another problem with these type of companies. This sort of thing can happen because mining exploring companies always need an influx of capital because they don't produce any cash flow, no receipts, no revenue, so they continually need new money to drill holes to find that next major hit. And if somehow the market lose faith in the company, then sooner or later it's bye-bye to these companies, and eventually they'll just probably fade away, or there's a backdoor listing, so maybe a tech company will take them over, that sort of thing. So another reason why I'm not a big fan of mining exploring companies, because so very few of them actually make it in the end. And anyway, there we go. G6M. Okay, thank you, Sensei. Yes. CCP breakout today, Ben Clark. Yes, but there is no new positive. This was an interesting one. So I am trading Credit Corp. So let me just put that out right now. I am trading Credit Corp. Now, just because I'm trading it doesn't mean it's going to be a successful trade. It's not the best looking chart. I will give you that, because you can see a fair bit of volatility in this company's share price over the past few years. But this is one of the things I'm looking for. You can see both the long-term moving average channels, so these two green shaded areas, you can see the red shaded areas turn to green. So these two green shaded areas tell me the share price is now in medium-term, long-term, and short-term uptrend. And this is, or could be, the signs of a new longer-term uptrend for the company. And when I say longer-term, it could be the next 6 months, 1 year, 2 years, 5 years. Who knows? It could go on for a long, long time. Because if you go through the history of Credit Corp, this company has gone for, their uptrends can last a long time. So we're talking about a few years at least. Anyway, so this could be the start of an uptrend for Credit Corp. Doesn't mean it will be, it just could be. I do see the signs here just with this chart. So I bought in at 17.98, share price 17.67. That's okay. I'm willing to be a little bit patient. I just want to see the share price get above 18.50. That will be the next price I want to see it get above. And I don't mind if it just slowly creeps up higher. I don't care if it's slowly going higher, because that means there's no day traders in it. They're not excited about it. And I just love when those charts just go up slowly. A prime example of this would be Shape Australia. This is the sort of chart I really like. If it comes in, it's just slowly creeping higher, very slowly. One thing I'd like to see is an increase in volume. But anyway, so Credit Corp, I do like that chart at this point in time. But again, who knows? They could get a really negative financial announcement tomorrow. Now, Michael Jordovich says, yes, but there is no new positive financial news. Now, I will enter a position without it being a traditional breakout, or my defined breakout. And the way I define breakouts, I like to see 3 conditions met: positive financial news, share price reaching at least a 3-month high. I do prefer a 6-month high, and higher volume. Now, I will pay a breakout if I don't see the share price if I don't see a positive financial news. So share price 6-month high or 3-month high, some bigger volume. So if you do have a look at Credit Corp, share price is trying to move into an uptrend. Well, we haven't seen the bigger volume coming through, but the company could release a positive financial news. Now, on the 7th of November, share price did increase 4.9%. I wonder if CCP, what was that 4th of 9th of November? 7th of November. Yeah, there's no financial news from the company. Anyway, so we don't have, this is not a classic breakout, but the share price is in an uptrend, and I'm willing to be patient with this. And the reason I'm willing to be patient with these sort of setups, because it's not a traditional breakout, because this is what could happen. Bravura Solutions. So I moved back into this company as a trade without the company really releasing anything that positive back in August. Share price had just moved back into an uptrend. It was showing signs of maybe the uptrend pausing, sort of was pausing for a few months, moved back into an uptrend back in August, and share price was just going higher. Nice looking chart. It was a pretty good looking chart. And then all of a sudden the company did release a profit upgrade on the 4th of December. And look at the share price since then. So sometimes it's good to try to find these setups before the company releases that positive financial news, and that's what Bravura did, and that's what I did in this sort of situation. So maybe that's what's going to happen with Credit Corp. Maybe the share price is going to be moving and continue to move in an uptrend, and maybe the company will release a profit upgrade. Maybe that's what the market is thinking. There's a higher chance Credit Corp will release some good financial news over the next few months. Just maybe. They don't always work, but just maybe. Simon PT, gold and stock price, gold price and gold stocks got smashed after Trump won the election. In my view, the long-term thesis for gold is intact. People will soon discover Trump's policies are very inflationary and the Fed will continue to cut rates slowly. That's my 5 cents. Yes, I think there's no doubt that Trump policies are very inflationary. In fact, I'm reading, or not reading, I'm looking at videos where Trump supporters are just realizing, oh, wait, it's more to do with if he follows through with his getting rid of all those illegal migrants, there's a lot of towns in America that are highly reliant on those migrants. There was one town in Georgia I was reading about, it's the carpet capital of the world or something, and something like 75% of their workers are illegal migrants. And if they will get shipped out, there's going to be no one left doing the jobs because the locals don't want to do those jobs. And that's the thing about these illegal migrants. They do the work the locals won't do because either the work sucks or they don't get paid enough. And if this goes through, if he gets all these illegal immigrants and he takes them away, pushes them back over the border, either there's going to be significant downturn in the economic conditions in the United States, or there's going to be significant increases in prices. Because to get people to do these jobs, the locals to do these jobs, they have to raise the wages, and even then might not be enough. Tariffs are inflationary. There's no doubt tariffs are inflationary. So Trump's policies are inflationary. I'm not going to say very inflationary. And it's really interesting that a lot of people voted for Trump because the cost of living. And if he goes through with his policies, the cost of living is going to get worse in the United States. It just boggles my mind that people don't understand this. And it's funny watching these videos and people, particularly in these regions where he voted for, Texas is another prime example. They are overly reliant on illegal migrants, and that state, I wouldn't say it's in trouble, but they're starting to realize, oh, geez, how are we going to survive through this? So it's going to be interesting if he follows through with this, because United States could go severely into recession, possibly even into depression, if he follows through, particularly with forcing all the illegal migrants out, because they bring a lot of revenue to the country, a lot of social security to the country, that sort of thing. Anyway, it's going to be interesting to see what happens over the next few years, because I think there is a great chance that America does suffer. He believes there's going to be fabulous growth, but he does not understand how tariffs work. That's the concerning thing. He thinks China pays the tariffs. They don't pay the tariffs. Why would the country you put tariffs on pay for the tariff? It doesn't make sense. It just doesn't make sense. But he believes that. I've seen him say that in a few interviews, that he thinks China's going to pay the tariffs. If that was so, then Australia just put 100% tariffs on all American products. So then America can give us some money. It doesn't make sense. So for those who don't know, and hopefully a lot of you do know. So when America puts tariffs on Chinese goods coming in, China doesn't pay it at their port. When it comes into the American ports, that's when the tariffs are put on, and it's American importers who pay the tariffs, and they pass it on to the American consumer. And not only that, so the prices will rise because tariffs, but the local products will also rise in price because the competition have increased their prices. And what happens when the competition raises the prices? The local companies raise the prices. So that will lead to inflation. It just boggles my, it's just so weird hearing Trump say, China's going to pay the tariffs. No, they don't. It's like, how can a president not know how tariffs work? It's just insane. And a lot of people over there think he knows how it works, but he doesn't. It's just insane. Anyway, a bit of a rant there. Thank you, Simon. Anyway, Reptilian. Sigma, from memory many moons ago, is a distribution of medicine to chemists, hence a good move by Chemist Warehouse. Sideways integration to their business. And then Roger says, yes, from memory, they also own Amco. I'm not going to talk about this. So in my opinion, Chemist Warehouse is the main partner of this deal. It's the only reason I would buy this is because of Chemist Warehouse. Sigma Healthcare has always been a really low-quality company. Always been a low-quality company. Stu Percy, I was listening to AusBiz pod, and the expert stated that there was still some upside to CommBank, even though it is now the most expensive bank in the world on every metric. Laugh out loud. Sounds like a sell to me. I don't know how anyone could be saying CBA is a bank unless they're a technical analysis. There is no way a fundamental person, investor, expert would say CBA is a buy. Now, if you look at the chart for CBA, it's not a sell. If I was holding CBA, I would not be selling just yet. And you can see on occasion the share price does fall a fair bit, but then it gets supported. We see buying coming in. So it is, I would say, not only is Commonwealth the most expensive bank in the world right now, it might be the most expensive bank in history. I'm going to say that it is the most expensive bank in the history. If you just look at the PE ratio of the company right now, 29. A PE ratio of like 16 is expensive for this company. 29 is absurd. Even if you have shares in this company, you don't get a big dividend yield. 2.94%. Why would you be holding shares in this company? Actually, I should say, why would you be buying shares in this company right now? Dividend yield is really low. You could actually get more just by having your money in the term deposit. And the risk of the share price decreasing is significantly higher than it has been in the past year. And some people would say, well, it's risen 50% in the last year. Something must be going right. No, it's nothing to do with the financial performance of the company. There is no financial performance of the company. They're flat. They're flatlined. There's no growth in profits, very little growth in revenue. It's not a growth company, and it's being priced as a growth company, which is absurd. So, CommBank, P ratio 29, Alphabet. And I've done this before. If I had a choice right now between CBA and Alphabet, I wouldn't even have to think. Alphabet's PE ratio is 22.9. This is a growth company. This company could be massively bigger in 5 or 10 years. CBA won't be massively bigger. In fact, it might be smaller in 5 to 10 years. And there's no reason why any Australian investor can't buy Alphabet shares right now. We have all the platforms out there. We have the ability. And I don't know why anyone would be buying CBA over Alphabet. Unless they're buying CBA for strategic reasons, putting their money into Australian stocks. Maybe it's international institutions just buying the biggest company on the ASX. That's all they're doing, which would be stupid, but they can do what they want to do. Anyway, that's the rant about CBA. Marty Scott, thoughts on Titomic? Do you think it's a good time to sell, or do you think it's a good medium hold? I wouldn't say I'm torn with Titomic. I do think this company has potential. It's highly volatile, really volatile. Now, one of the things I would be probably a little bit, wouldn't say I'm concerned. Now, they're not cash flow positive, but they do have, in the most recent appendix 4C, $3.5 million receipts and operating cash flow negative 854. So they are moving in the right direction. So they are increasing their receipts, are increasing their revenue. Now, I could never tell you without looking what this company does because it goes way above my pay grade, goes over my head. So I always have to look at what they do here. So they are, specializing in large integrated solutions for industrial scale metal additive manufacturing using its patented gold spray additive manufacturing. Gold Spray AM provides cold spray AM solutions, OEM production, and R&D services to the global aerospace, defense, shipbuilding, oil and gas, etc., etc. Whenever I read what they do, whenever I look at what they do, it does impress me. So that alone impresses me. The very fact they do have revenue, do have receipts, they are selling something, that means there is a bit of substance to this company. I just want to see the company reaching profitability and cash flow. Now, I think the market is saying, I think they're on the way. Market is saying, I think this company is on its way. You do have to pay, I wouldn't say a premium, but the market cap of the company right now is 235 million. And I do like this chart. I'm going to be honest with you. I actually like this chart. A beautiful dip in the share price back in September, down to 11, 12 cents. Share price then doubled, and we've just seen it dip again. This could be another buy the dip for Titomic. Now, the one thing I do like to look at in these sort of situations is the volume. And what I want to see is increasing volume. We sort of do see that subtly, but I would like to see bigger volume coming in on the most recent upswing in the share price. But we didn't see massive volume coming in except on one day. So I think the business, what they're doing sounds really interesting. And the chart looks really interesting as well. 4 weeks ago. So 4 weeks ago, the share price was in an upswing. That would have been a good time to sell, and now you could buy back in if you did sell. So maybe what I should do with some of these is actually reply to them a little bit quicker than I'm doing now. Okay, informative upload. What car do you own? What year it was made? Any plans to upgrade to BEV soon? No. So I own a Mazda CX, whatever it's called. I can't believe I can't remember. Mazda CX. It's not CX. It's not C5. Sort of like a CX5, that's what it's called. Mazda CX5 SUV, 2014. It will be my last internal combustion engine car. I will not own another car like this ever again. Possibly it will be the last car I ever buy. I do believe that eventually people won't own cars. People will share cars because everything will be automated. And to be honest with you, cars are very efficient how we use cars. So you might drive it once a day, like I drove it this morning just to go to the shops, come home, and just sitting in my car park for the next 24 hours, maybe even longer than that. It's very efficient. So the future is that cars won't be owned, they'll be shared, and they'll be shared by many people. So you have many cars shared by many people. So when you do need a car, you can use that car, and then once it drops you off, you can the car will be doing other stuff. This is the future. And I was going through these comments from a prediction of the future from this guy who has a really good history in this, predicting the future. And he said exactly the same thing. We're going from an ownership system to a share system. That's the future. And cars was one of the things he mentions. I don't think there's any reason to be owning cars in the future. So I think there is a chance this will be my last car, and I'm just going to drive it and continue to drive it as long as possible. Anyway, that's and you're going to save us a lot of money too. And automation will be automated, fully automated. The roads will be fully automated eventually, and it just makes sense for everyone, including it saves a lot of money, less deaths, that sort of thing. Brandon 6618, a few days ago, Brookside announced their wells returning a decent yield. However, the price didn't move on that day, but today they were up 14.4. I do remember that day because I am a shareholder. Seems like the small cap space can take days to react or interpret what's going on. Are you still holding to your position here, Kneppy? The answer to that is yes, I'm still holding on to this. And the main reason I'm holding, not selling, I do think this company is one of the cheapest or potentially one of the cheapest companies on the ASX. And on occasion, I go to Hop Copper. I just want to feel out the sentiment in this company. And most of the shareholders in Hot Copper or in this company via Hot Copper are so negative about the company. And I always want to think, if you're so negative, why are you continuing to own shares in the company? It makes no sense. And the reason I think this could be the cheapest stock in the company is because they're forward goals, they're long-term goals. And there's every reason they're going to hit the long-term goals. And if they hit their long-term goals, we're talking about the next 5 years, this company is really cheap right now. So I'm not going to sell my shares in this company right now. They did a share capitalization. That's why the chart looks like this. Share price now at about 50 cents. It used to be at 1 cent, between 1 and 1.4 cents. And now it's at 46.5 cents. So, yeah, there's a massive rise in share price in one day. I would say, in answer to your question, it doesn't take days to react. Sometimes instantaneously, the market react. Now, when a company does release a profit upgrade, no matter what company it is, the benefits of that in terms of share price appreciation of that profit upgrade can last 6 months. Can last 6 months. I've done research on this, and 6 months is the period where a profit upgrade can have positive effects on a company's share price. And the reason behind that, and this is just me reasoning, trying to understand why, is because sometimes it takes time for that information to digest, for analysis to put the new information into their models. Sometimes it takes a while for everyone to know that the company released a profit upgrade. It can take a long time. And the reason I think it's 6 months is because typically if the company releases a profit upgrade, it might take 6 months before they release financial news. And that's when the rest of the market goes, because they could have missed a profit upgrade. So don't forget, a lot of people don't look at announcements. They don't look at announcements at all. So they won't know the company released a profit upgrade. And then when they release the results, the rest of the investing community who didn't know they released a profit upgrade sees the results and go, whoa, that's pretty good. And that's why I think it lasts 6 months, because it takes a while for the information to digest. So I don't think it's small caps, and it's not this type of announcement. I'm not sure what happened on this day. It could have just been some day traders. I don't know. But anyway, I am not going to sell my position in that company at all. I could be wrong. I could be wrong. Well, that's fine. Rick Thellian, ANZ shareholders may have been expecting worse figures than released. Let's have a look at ANZ Chart. I'm just going to see and compare this to CBA. If I had to, chart looks okay. If I had to pick one of the 4 big banks to buy, I'd pick ANZ. P ratio 15.4, but even for this company, it's high. I have traded ANZ in the past, and whenever I bought ANZ shares, it's when the PE ratio has been below 10. And it doesn't stay below 10 for very long. That's the time to buy ANZ or any of the banks, when the PE ratio gets to historical low levels. It happens on occasion. And right now, it's at historical high levels. So, for instance, I bought some ANZ, I forget exactly, it must have been back in 2016. The share price was $21, and it didn't take long for me to sell at a 50% profit. Yeah, so that's when I buy banks, when I see value, not when share price has gone up 50% in 1 year. Okay, Rick Thellian, Block expected 6.248 billion, but only came in at 5.98 billion. So that's suggesting that Block had a miss. But I do notice Block's share price chart looks quite stunning right now. Looks really good. In fact, I'd say this share price of this company is broken out. So something else has happened with Block over the last 4 weeks. Share price has moved into an uptrend. That's the weekly chart. In today's chart, you'll notice it's a little bit more jumpy, and that's because this is dual listed. If you actually have a look at the New York Stock Exchange Block, it's a little bit different. That's a normal chart. So just compare this chart to this chart for Block, and that's a consequence. The difference between these charts is a consequence of a company being dual listed, because what happens in America overnight will dictate what happens on open with Block on the American or the ASX. That's why you see massive jumps or drops in share price on open. When you don't have that dual listing, you're more likely to see a chart like this. You can see how they are correlated. You're more likely to see a chart like this, which I refer to this as a normal chart. If you don't believe me, have a look at Rio Tinto, dual listed, and you'll notice the same thing. So Rio Tinto is on the New York Stock Exchange, the ASX, and it's not quite as significant as the Block, but you still have these jumps. And I think even like BHP, you see a similar thing with this company, listed Yeah, you see all these jumps. Yeah. Anyway, so something else must be happening with Block for the share price to have gone on a really good run recently. Ben Hutchinson agrees with me on the social media ban. Like when they try to ban rock and roll in parts of America in the 1950s, this nanny state behavior won't age well. I could go on a massive rant when it comes to nannies. I hate nanny states. Hate nanny states. I hate it. Doesn't mean I'm all for anarchy or anything like that. I believe there should be rules and laws. I mean, what it just what's that guy who broke into a house with a machete and he got killed. I have no sympathy. I think if someone breaks into a house, all bets are off. You can protect yourself, your family, however means or whatever means possible. And the person breaks into your house, dies. That's that. That should be law. I'm not sure if it is a law. It should be a law. But when you have things like little nanny things, when the government says they want to protect us, they're not trying to protect us at all. A good example of this, now I do believe in seatbelts, and I believe seatbelts are very, I think everyone should be wearing seat belts. So I'm not saying you shouldn't be able to wear seatbelts, because if you do get in an accident, more likely you're going to be hurt or killed, and actually is a cost to the country when you do get hurt because you're not wearing a seatbelt. But I'm talking about little things like, for instance, what's another law? Social media ban's a great law. That's a great example of a nanny state. It doesn't make sense. I'm trying to think of another example. There's plenty of examples out there, but I'm just raging right now. I can't think of any. Trying to ban anything, banning books, banning anything is just stupid. You might be able to say I'm all for free speech. Yes, I am. And I just like it how they're saying they're trying to protect the children, and it's all about bullying, or it's all about bullying, trying to stop the bullies. Bullying has been happening for thousands and thousands of years. It's going to keep on happening for thousands and thousands of years. Trying to blame social media for bullying, oh, come on, get off it. Anyway, Shan Fidong, Sha Fi Ding Dong. Banks are in a bubble, need to sell soon. I am not going to debate with you on that. However, I will say this. The market can remain irrational for a long time. And who knows, the share price of CBA could keep on going up for the next year or two. And if that does happen, the bubble is just going to expand. And when it pops, and it will pop, the after effects of that pop are going to be extreme on the ASX and possibly even in Australia, because the bigger the bubble gets, the worse the pop is. So hopefully it pops soon. How much bank buying is due to index fund? I don't think it's that much. And the reason I say that is because if you have a look at CBA, a great example of CBA, it's just happened recently in this year. So for a few years, share price did nothing, going sideways. And all of a sudden, the share price just took off. That can't be index funds. Index funds have always been around. Well, not always, but they've been around for the last 10 years or so, maybe even longer than that. So it's just not the index funds. There's a reason. I've heard people trying to explain it. I've heard some people saying, well, it's just international institutions buying Australian assets, and they can only think of buying CBA for some reason. I've heard other people saying there's rotation from the mining into the banks. But why would you be rotating into the banks when there's no dividend yield and the valuation is so high? The upside is just not there. I just don't understand it. There's very little upside, particularly if you're going to be owning for the long term. I can see the share price of CBA remaining below $160 for the next 5-10 years, which means you get no capital growth. All you get is a dividend, and that dividend yield 2.94% might not increase all that much over the next 5 to 10 years. So all you're getting is like a 2.9% return, which is pretty bad. You can get significantly better returns than that. Anyway, so eventually people would be saying, institutions, everyone would be saying, there's just no point buying CBA. And that's when I think the top has been reached. At this point in time, I don't think there's no signs we're near the top, just based on the chart. Anyway, just James Dean, Bisalloy up after Minister, extend foreign tempered steel imports ban for 5 more years. Sometimes when we do ban stuff from overseas, it can be useful because some of these international companies do try to flood the market and stuff like that. I'm not sure what's happening with Bisalloy Steel and this tempered steel imports ban. I'm not sure if that is beneficial for the country as a whole. That's the thing. Is this beneficial for the country as a whole, not just for one little business? So that's a whole different story. Anyway, Bisalloy Steel. I did have a look at this chart the other day, had another look this morning, and I went, it's looking really interesting. So share price dove a fair bit. Share price went down to 260 back in August, and share price is moving back into an uptrend. Price earnings ratio 13.2, dividend yield 7.6. Would you rather have that dividend yield than 2.6? And there's potential for capital growth with Bisalloy Steel. There's no potential or very little potential for capital growth with CBA. And the reason I say that is the PE ratio of CBA going to remain at 29 for the next 5 years? And the answer to that is no, it won't. I can almost guarantee, it's an almost 100% guarantee it won't stay at that level. Anyway, thank you for that, just James Dean. Bisalloy Steel chart looks pretty good. This is an interesting comment because Neuren Pharmaceuticals share price went on a massive tear and it's fallen all the way back down. So just remember that. There's a bit of context to this particular comment from Ben Hutchinson. I'm one of those trend-following folk who thought I was being clever, sitting out of Neuren while it was downtrending, now wiping off my face. Not anymore. By my calculations, that 50 million payment is worth about 40 cents a share, but they've risen almost 10 times that. Explosive change in sentiment caught me unawares. So let's have a look at the chart for Neuren. And Ben is not kicking himself anymore. So massive rise in share price, and it's fallen all the way back down. But the funny thing is, the interesting thing is, I'll put a line there, hash line. I'd say $12 is a support level for this company. It's without doubt. Share price before that big jump was at $12. It's just said right about $12. Share price dropped all the way back down to $12. Share price going sideways, and it's gone on a little bit of run since then, not much. So it does look like $12 could be a support level. So if you do buy shares in this company, say about $12.10, it's a low risk trade. You buy at 12.10, it falls below 12, hey, you're small loss, but it could go on a rally here, don't know. Anyway, I do own some shares in Neuren. I am not trading it, however. Okay. Thanks for your reply. I like this company, no debt, buying back shares and monopoly of this product. I keep buying this company. Unfortunately, I have no idea which company he's talking about. I've noticed here why I've written here in this answer reply, why I am on the cusp of selling SXE. I have completely sold out of SXE. So what I'm going to do is have a look at SXE. Southern Cross Electrical Engineering. This is just a trade for me. So I bought in on a breakout at $1 back in March. So it wasn't in this trade for very long. Share price in a beautiful uptrend, showing some signs of weakness back in October. Fell through sell point back about a month ago. There was a nice bounce, and then the share price hit a resistance level, which is the shorter term moving average channel, and it pulled back after hitting that. And we had seen the share price fall below $1.50. So I sold this about a week ago. Took out completely, sold out completely. Yes, completely sold profits because I don't like the chart. Anyway, so that's me. That's mention of why I am on the cusp of selling Southern Cross, and I have sold out of Southern Cross. So maybe I'm talking in regards to that company there. Chap Liquid. Thank you. Very kind comment from Chap Liquid. Chap Liquid, whenever you get the chance, could you please have a look at Develop Global? I must have answered this one. The reason I said I must have answered it is because I've liked these. And typically I give the thumbs up when I've answered them. But sometimes I forget to. What I do is I put the link to the video in the reply part, but sometimes I forget. Hence, and also it gives a thumbs up. So I usually have 2 ways to know I've replied to a comment. But sometimes I forget. I always remember to give the thumbs up, but sometimes I forget to put the link. But it doesn't matter. I'm going to have another look at DVP, Develop Global. And the reason is because I am trading this. Yes, I'm trading this one. And I'm thinking of taking profits, because the reason I bought is I expected a bounce. I have now seen that bounce, and I'm thinking, how high is a bounce going to go? I just don't know. And I am up 27, up about 15%, roughly 15%. I'm willing to take that profit with this trade. So I bought a $1.97. So there was a nice little support level at about $1.90. So I thought I'd just buy near that, and the share price has bounced. Pretty nice bounce over the last few days, but this is not the sort of trade I like for the longer term, because I have no idea which way the share price is going to go from here, because it's not an uptrend at all. So I don't have confidence the share price will move any higher than this. So I am thinking of taking profits with Develop Global. Nice little bounce. I don't remember answering this. Would Solomon Lew be that in retailers as major investments? I don't remember answering this. Would Solomon Lew be that in retailers as major investments? I'll just answer yes to that. Rick Thelen also, China with Trump's tariffs to China for corn and soybeans. China is going to get from Brazil and Argentina, taking about $8 billion from American farmers. This is just a start from China. John Deere moving to Mexico to use cheaper labor. I'll have a 200% tariff if the move happens, if they say there are no tariffs. China decimated the soybean farmers in America. So the Americans had to subsidize the farmers over there because China said, get lost. I think they put tariffs on soybeans or something. So a lot of the soybeans from America went to China. And when they put tariffs on it, destroyed the American farmers, and they had to give them subsidies, that sort of thing. So tariffs hurts everyone. It hurts the company who puts the tariffs on the product. It hurts a country who gets the tariff put on them. It hurts everyone. That's why free trade is the best system, because what happens over the long term with free trade is everyone finds their competitive advantage. Everyone finds it. With tariffs, you don't find it. Everything's ineffective, maybe not ineffective, but inefficient. I'm pretty sure Australia had massive tariffs on vehicles because we want to support the local car manufacturing sector. What happened there? Yeah, it just doesn't work. History shows us tariffs are not good. History shows us time and time again, tariffs are not does not work. Funny enough, I was talking about the tariffs in World War II. What's it called again? Sometimes your memory goes really, really weird. Smoot-Hawley. And I actually did not know Smoot-Hawley tariff Ferris Bueller. Someone actually told me this. There's a scene in Ferris Bueller when there's a teacher, Ben Stein is a teacher, and he's actually talking about the Smoot-Hawley tariffs. And everyone's just looking, all the students are looking so bored. And in fact, if you have a look at the quote, wherever it is, they got a. No, I don't want to disappear. I am so. Yeah, and he even says in this particular scene in Ferris Bueller that tariffs are bad. So anyway. Maybe I'm a little bit too unfair on tariffs. I do think targeted tariffs can be good initially, particularly for startup areas, sectors, that sort of thing. But over the long term, tariffs don't help anyone. Yeah, it's just anyway. Maybe I'm a little bit too negative, but I don't know. Thick Thelian, Start Entertainment Group did capital raising, hence the drop of share price of about 28 cents after trading up. Yep. Okay, your Frenchman, I think a lot of New Zealand's popularity came from The Lord of the Rings. They're coming out with a couple of new films, I hear. Really? Oh, wait there. They're coming. I do know there's an automated. There's an animated, not automated. There's an animated new movie. Is there? Yes, it's an animated. Oh, wait, Discovery's planning 2 new live-action Lord of the Rings movies. with the first eyeing a potential 2026. But I'm pretty sure there was there it is, the War of the Rohirrim. It's animated, coming out, I don't know when. Yeah, War of the Rohirrim. I did not know there was new live action Lord of the Rings. Is there more to tell? I don't know. Is anyone watching the Lord of the Rings TV show? I sort of get bored when I'm watching it. There's just no action. Come on. We've got Sauron and we've got Galadriel and Elrond there. Well, do something. Stop talking. Do something. Anyway, I'm being a little bit unfair. Okay. And your Freeman also says, AIZ seems good value to me right now. Sensei, imagine if Air New Zealand gets $9, $10 per share like it was in June 1999. And he also says that'd be crazy. Oh no, your Freeman says that'd be crazy good. I can hardly comprehend the gain. Paint me not so ambitious, but it's static with $1. Let's have a look at Air New Zealand. I did trade this. I think it was Air New Zealand. Yeah, I was trading this here. Back, I took a position in Air New Zealand in 2022, late 2022. Share price was moving into an uptrend. Then the share price went sideways for about 9 months. Yes, 9 months. Went sideways, and I just got out. I did become bored, which I sometimes I wouldn't say. I sometimes mention that when the share price goes sideways, holders become bored and they do sell out. So ideally what you want to do when the share price goes sideways is wait for a breakout. Now, this was a false breakout here. The share price went a bit of a run. That was just before the company went ex-dividend. I remember this. And then the share price went ex-dividend, the share price just dropped. So it seems like people were just waiting for the dividend, and then the share price just dropped. So that's from about 72 cents all the way down to 50 cents. So there might be value here. And don't forget, this company was supported by the New Zealand government, and I'm pretty sure Air New Zealand's biggest shareholder might be the New Zealand government because of COVID-19. We should have done exactly the same thing with Qantas, but our government was so stupid and idiotic that they didn't even think about that. Maybe they thought about it, but they decided not to. And then Qantas management gave all their shareholders a massive, dividends and share buybacks with our money. With our money. Yeah, makes me mad. Largest holder. Yeah, New Zealand government owns 51% of New Zealand, and I'm pretty certain that's because they helped them out during COVID-19. Again, why didn't we do that with Qantas? Stupid. It's one of the reasons I hate government in Australia. Both political sides. I hate both political sides. Anyway. Yes, 1520 SAT score. I too expect some recovery on Monday as Healius saw over 1.2 million shares change hands at the close of business. Let's have a look to see if Healius has recovered. That's one little benefit of doing these replies a little bit late. We can actually see what's happened. And Healius, it looked like the share price was moving into an uptrend, and then you can see the share price was showing a little bit of weakness from about the middle of October through to the middle of November, and then the company released something negative, which is why there was that comment. Share price dropped 16%. I thought there was a little bit of an overreaction. Share price has recovered a little bit, but I'm not interested in this chart anymore. Because I was thinking the share price was moving into an uptrend, but no, not anymore. So I can find better setups out there. So this is not a good setup in my opinion. But we haven't seen much of a recovery, but there is a slight recovery. I've lost my 58 minutes. Sensei says I'll end this particular video with my very first video on SCEE initial analysis. That's interesting because I've held SCEE for a very long time, and I recently decided just to take profits. Wednesday, 20th of August 2025, the 5-year anniversary of this channel. That's next year. And this video was the beginning of the journey. What made you start uploading, and how many years were you already an investor in stocks when you upload? Okay, this deserves, I think, a standalone video. I'm going to say this deserves a standalone video, and I will do that during the next week. Okay, that's all I have for this particular video on your answers, or not your questions and comments. If you have any more questions or comments you want me to discuss or answer, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.